Alright guys, I'm going to do a quick video on Bitcoin, the indexes, the shit Trump's talking about, um, Neo, Mara, Tesla. Alright, let's get started. So, yesterday Trump signed an executive order on automobiles made outside the US for 25% tariffs. And then also over the last 48 hours he talked about tariffing specific products such as aluminum, lumber, pharmaceuticals, and this is on top of him starting a tariff war or trade war with like 7, 8 countries at once. Um, Essentially, he's creating such a risk off in the market of uncertainty that he's breaking like every chart. He's causing constant sell off pressure. He's causing constant um, risk off pressure. He keeps talking like this, so people have to keep selling out of the market. It's like a rush to the door type scenario. And then April 2nd, so next week, uh, is the implementation of all of the reciprocal tariffs. Essentially, it's like if he would just not talk so much, then this wouldn't be so bad. But he talks all day about it, and now it's like they have these trading algorithms that press sell every time Trump talks because of his association. He's associating his talking with negativity in the market. So anytime he talks, he's causing sell pressure in the market. And then he's talking all day, which is causing constant sell pressure in the market, right? This gives shorts and the traders who want to take the market down the opportunity to win, right? They get to add to their positions. They get a cost sell pressure, especially the ones who have algorithms on Wall Street. So we're at a very concerning time because it's like he can enter us in a bear market. He has that possibility because it's like eventually if enough traders keep selling, if enough big money keeps selling, they're going to be so sidelined that the the bears can win, like the shorts can win, because the charts are so broken that not only is he creating a fundamental risk off environment, but the technicals are starting to read risk off. So I was concerned over the last 2 days because we were hitting a lot of a lot of major resistance. So the RSI, in case you don't know, it represents risk on, risk off atmosphere, or overbought, oversold atmosphere. Okay. So typically, in a bull market versus bear market, the 50 is a good line in the sand for overbought, oversold conditions, and then also apply that to like intermediate positions of like days, weeks, months. So you can see during the bearish aspect of all the charts, the RSI spends most of its time under 50, right? With the consistency of sometimes it overshoots to 60, but then it spends more of its time on the bottom side between 20 and 50. When this happens as well, most often around 50, 50 here, 50 here, 50 here, you see resistance. And it always marks the top of a downtrend, right? Top of a downtrend. So going in to this week, I noticed that we had a similar setup to the 2021 top. Now actually let me show you this one first. Um, on the weekly manner, on the weekly time view, you can see that the 45 weekly RSI has been the bottom of the entire bull market since 16K. 16K right here, 16K. Since this has happened, in a bull market, it's the top side, right? Find support around 50. In a bear market, right here, right, since the top, we start breaking under it, and then it can't get above 50 until it goes back into a bull market. That's how it works. So it marked the bottom here in the cycle, and marked the bottom here. Now, given it bounced around here, but it was a bottoming formation, that's the number 7 shoulders. And then as of this week, we were curling, and we are curling still. So that's the larger time frame when we zoom out. But when we zoom in, I was a little concerned because we, on the daily time frame, we're spending a lot of time under the 50. You can see this, right? Here was the bear market 2021. And then here is the beginning of whatever this is, right? If we find support on the weekly time frame and we go to new highs, then we're good. And we break above this. But at this point, also on the 23rd of the month, right, we were finding resistance at the 50. At the 50. You can see for 2025, since February 19th crash, it's been resistance. 4 times, right? Resistance. Mark on the top. Also on the chart, you can see that once we broke the blue trend line, it became resistance here, resistance here, resistance here. This is also the same thing with the 2021 bear market. So this is where I was concerned that we might be at. I did a chart overlay of 2021 and then placed it here, and you can see it has a lot of similarities. There's some organic price action here, which is why it's never perfect. But you can see the pivot tree is relatively the same, which found us here. Right now, if we look, today or this morning, we're still around this level. Now, given it's 4 a.m., so it's 4 a.m., the market closed red last night, and we're up 0.76%. So right now the RSI is showing a curl up. But if we close the day red, this will be a rejection here, showing a rejection here. So I think today is very important, not only in crypto, but essentially the entire fucking market, that we break above this and we close today green. I think today we need to close green across the market, and it's very important that we do so. But then again, Trump might fucking talk all day and fuck us. So that's the RSI. You can see on the chart, we're having trouble with this cloud flip, right? And we've already spent 3 days here. 3 days here. And if we start rejecting here, that gives the bears power. Another really important aspect is, remember the gold and purple line? That's where it always finds support. It found support here in 2024. And then in 2021, it found support until it broke it. Right? You can see we chopped around, we made one higher high. This is where I was hoping we were and are. But if we start giving up the purple line and the gold line, then it will enter a bear market. So that's where we're at right now. All right, that's Bitcoin. Unfortunately, it's the same for SPY and all these other ones. It's actually freakish how many names hit their 50 RSI in sync. SPY did, QQQ did, Tesla did, Nvidia did, AMD did, MAR did. It's like the broad market resistance. And then you're at this point where bears are going to step in, and then you have Trump talking so negative the entire day. Not for 5 minutes, but for like 6 hours yesterday. He just kept taking interviews. So Wall Street's having a ball with this. The people that are short in the market, they're paying their media guys to ask the really aggressive questions to get him to talk about it to bring the market down. So the RSIs look like the RSIs are really a really important inflection point for a reversal, which is not good. Now, given once again, we're all at the purple and gold lines, which is why I keep saying it's like we're at a bottom, or if we give this up, we enter bear market territory, and that's very concerning, especially when you have Trump talk at this level, giving such a strong rejection that the technicals can start aligning to a correction. Like the technicals can start forcing people to trade bearishly. Because right now, all of this bearishness is from a guy talking. Well, I mean, he's the president, but a person talking negative, giving uncertainty. It's not the actual economy. Now, the COVID algo on QQQ. So far, it's doing pretty good, right? 38 days of the same pivot tree. Like if we zoom in here, which is what I asked you guys to do, you can literally see it follow the price action near flawlessly, right? Even the reversal up to around this point, right? I really liked it, Monday, because we were starting to break above the algorithm. And when you get above the algorithm, that's really strong, like we had with Baba. But then he started talking today, and there was a huge sell-off, right? Huge sell-off, which in the algorithm there is a sell-off here. So it's important that we rally into the weekend, right? And if we can see that, then maybe the algorithm's still at play. But this is starting to disconnect yet again, even though the pivot tree is there. So like today and tomorrow is so important, and honestly will tell us in the entire market, I think, just because every chart's pointing at that too. So that's the COVID algorithm. But once again, the two main places, once in the market, once the 200 daily moving average is broken, it is a major key of resistance. And that's where like the most like the biggest amounts of shorts will always try to step in to try to cause a bear market. Because you can see during this bull market, it was the support. Now given this is the one true overshoot since the entire bull market. Now given the gold and purple line also connect to support. But once we broke under it, right here is where you can see this was the beginning of 2022 bull market or bear market. Once we broke under it, found support with purple, rallied to the gold line, rejected. And then it started a year and a half down turn. And this is where we're at with the 50 RSI, with Trump talking about tariffing specific products. Like there's so much growing pain for the tariffs if he keeps doing this. Like idea would be to do it slowly, like right, like stabilize it, standardize it, maybe do some of the countries, and slowly set it up. But to try to do this all within 1 year, um, it's really starting to bring uncertainty and make me nervous. But you can see even with 2022 as a reference, right here, this is where all the bears are going to step in, and a downtrend can start. Um, and we literally had him tariff automobiles yesterday and talk about tariffing specific products. Like this is not good. He needs to shut up because he can create a bear market just on a technical basis, right? If he keeps talking and all the algos keep pressing sell every time he hits the headlines, what's going to happen? It's going to keep selling, right? This is a lot of structure. That as long as we defend this, we're good. But this is a week, 7, 8 days of structure. So it's like it should act as support for now. But if we break through that, then that's a pretty big story. Also, to break through that would be to invalidate the COVID algo. So we're at a really like a big inflection point. We really are. He needs to chill. He needs to support the idea of the market rallying. Otherwise, on a technical basis, he's going to break it. And you can see it in 2022, that bear market. Thing is, we've been so strong the entire time. This is when it breaks below, and you can see a reclaim. So this is what we need to do. We need to reclaim it. It's okay to reject it on the first day or two, but we need to make a higher high, and we need to get above it. So that's the 2020 crash. Broke below it here, found resistance here, then went down for another month and a half downturn, and then reclaimed it. You can see it even reject here a little bit, but then eventually higher highs. That's what's important. We need to reclaim it. We can't reject it too hard. Otherwise, this is what happens typically. Once it breaks a lower low, it's a downtrend. QQQ. HSI, the China index. It has been staying up here, but it did break the trend. You can see the red line is the trend for the entire uptrend. We officially broke it. And although we're green, today, we didn't make any ground. The green cloud officially turned red, and now that's going to act as resistance, and that could technically be a resistance right there, a rejection. That's a top wick rejection. We could send lower. I mean, this is setting up for bearishness because of Trump setting the market up for bearishness, right? With him spamming talking for 6 hours yesterday, the algo started pressing sell every time he talked. So even the China sector or the index kind of looks bad on the daily time frame. If we zoom out, we broke above the gold, we broke above the purple, and the purple is been the resistance, and now we're trying to find support. All bull cycles find support in the green band. When the green band is broken, that's when the downtrend starts. But we're still pretty far away from that downtrend, or the bottom of the green band. So there's still a lot of room for sell-off before we even realize it's a downtrend. But that's the risk there. Tesla, Nvidia, all of those. There's a gap here at 250. That's two bottom wicks. That's two beautiful weekly bottom wicks out of the demand, and it rallied 35%. That's a beautiful rally, but the green cloud is red. It's going to act as resistance. We are under the gold cloud. The longer we spend under the gold cloud, it will turn yellow, right? This gap with a lot of pressure can get filled. It's around 250. It's on the weekly time frame. I said, you're going to want to trim or sell around 280 because of this daily demand or supply zone. It's also the 200-day moving average. You can see fairly easily we got a pretty harsh rejection yesterday at some point at 6%. Now, this looks like a possible 1, 2, 3, 4, 5. That could be, which is what I would like to see. If this is a 1, 2, 3, 4, 5, we shouldn't get under 250. But guess what? The 250 is the gap fill. But wave 4, if this is wave 4, can retrace to 250. So there's a lot of room for sell-off and a correction in Tesla, and it still be valid. 250 is also the purple line after selling below it. And then this could be nothing more than a back test reclaim of the 325. Back test of the reclaim of the 325, a back test of, the 325 moving average, the 250 psychological price action, the gap fill, the 50% retracement. There's a lot pointing at 250. I will say, I haven't talked about the ADL lines, but the ADL lines are all actually really bullish across the market. Even though we had this crazy sell-off, look at how much accumulation that Tesla's at. It's at the prices of 437. So they now have as many shares at 260-ish or whatever than they did 50% higher. That is insane. There's a similar thing with IWM, small mid cap. Price as high as, so current price is at 205. As high as this price, which is 10% higher. So there's a lot of accumulation here. Also, this is something to note as far as small mid cap. It found support here. That's been the uptrend since the bull market. But we did reject at this double top right here. So we need to break above that. And then now NIO. All right, man, this is so unfortunate. So NIO has had no reprieve. A lot of stuff is up a little bit in the overnight, and NIO is down 1.4%. NIO is 416. Very unfortunate. I don't know. I mean, I've never seen so much confluence on a chart pointing at so much stuff. I really haven't. The video plus like the small things I updated at the beginning of the week, that's like 16 points of confluence. Like most people will take a trade off of like one strategy, two strategies. But when you see 16, that's a higher probability setup. There's 16 things pointing at it, right? First and foremost, let me just say the stop losses that I've been saying for like 2 months. Soft stop loss is 420. Hard stop loss is $4. I've been saying this for like 2 months. We're currently under the soft stop loss in pre-market. Now, given these are all daily closes, just understand that. So, 3-year downtrend, broke above it, and as deep as this retracement is, it's above it. Like we haven't even broke below it. But guess what? To break below that also means we have to break the ascending support. Let me do this real quick. To break below the descending resistance breakout, which could be nothing more than SR flip, right? A support resistance flip, would also mean we'd have to break the uptrend since August. So that's two ascending, like two supports that it would have to break at the same time. That's also, at the same time, it would have to break under this pivot. You can see this is the bottom, so low, higher, high, higher, low, higher, high, higher, low, higher, high, and now we have this pivot. So do we break this? This is, the bottom of this is 410, 410. To break 410 would mean that we'd essentially break all three of these supports plus this pivot. So that's going to be pretty evident if this happens, at least on a technical basis of this. If we don't look at the other 2020 look, the algorithm, all that stuff. So 410, a break below 410, will break all three of these, which would be a very bearish occurrence, as if this isn't bearish enough. This is nasty, man. Every one of these is like an 88% retracement. Every one of them. Straight up, straight down. And it really sucks because with the cattle news, and price went up to like 575 in the overnight. I was going to immediately rotate everything into August $10 contracts just to buy extra time because we were in March. This original trade idea was from November. We've already burnt 4 months of contracts and we're sideways, right? Literally sideways, since November, right? Like, oh, we're down, 4% from this low, but essentially sideways since November. We had this pop up here, but we're still higher than the August low. And so in that time, our contracts have been decimated with decay, and it sucks because like that was just last week, right? It was this day right here. But instead, it was at 575, and then super negative news hit, and the market opened flat. It opened flat because the broad market was selling off so hard that there's nothing that they could do. So that's the invalidation, right? 550, or sorry, $4. And 410 is when, the charts are going to look bad. Unfortunately, something that you don't want to see is the pivot low in the China index has already been broken, given the ascending support has not, though. So just note that. That's a bearish occurrence. Yesterday, with yesterday's sell-off, like 4 of the technicals invalidated that we were looking at. Something that's really important to notice is this is literally 2 years of pivotry. Like over here, it's very accurate. Here, we didn't get as bad of a sell-off. Here, it rallied more than it did with algo, and then here it did not. Over here, it followed pretty well. We have to acknowledge that this is 2 years. Well, 1 year. 1 year of pivotry, right? It's very accurate as far as the pivot lows and highs, right? Like even the microstructures, you can see it right here, top, bottom. Even though it rallied here, mark the top here, right? And it follows for a year. And now we're sitting here, pivotry, pivotry, pivotry. You can see it like this has a lot of validity. We have a year's worth of data of the pivotry being symmetrical. And now we're sitting here at the most max pain situation where all this is about to invalidate. And it's literally saying that this was a final pivot low in this area for an uptrend. Now, given This uptrend was the uptrend that started the entire cycle, entire bull market of NEO. And we have a year's worth of data that shows this. Now, if we got into April, even April 3rd, look at this, April 3rd, April 4th, we're up here, right? We're up here. If price started coming down here and started going the opposite way, then that would finally invalidate it, right? But we are less than 4 or 5 trading days away from this saying we go parabolic, this saying that we go literally to $9 by the middle of April, to 15, by May. A year's worth of data, this followed pretty in line. A year's worth of data, this followed pretty in line. Look at this. Like you can't ignore this. This is something. Plus, we have the weekly MACD green. Plus, this is a breakout back test. Plus, this is ascending support. Like there's so much here. Is this Max Pain? Dude, my account's destroyed. I'm sure everyone's account is fucking blown up. But the thesis is here. It's just the worst case scenario I've ever seen. But if this breaks under 4, then if you want to follow the trade thesis, it has always been $4. A daily close under $4, and which would invalidate because it'd break this pivot low, right? But man, like we're right here. Like it says today, around today is like the lowest candle, right? And then an uptrend starts. Now, given if we go into a bear market, then this probably isn't going to play out. If Trump keeps talking and SPY and QQQ and all that stuff goes into a bear market because it's at that inflection point, then that could be the case. But what if the QQQ COVID algo, which has been following pretty well so far, plays out and that is the COVID low and that is the COVID bottom, and this is a Max Pain where this is a low cap and they have so many shorted shares that they're able to fuck us and shake us out. So it's about your risk profile at this point. Essentially, we're 17 pennies away from the price of invalidation of the chart, right? So $4 invalidates the technicals of the chart, and then the only thing we have at that point is the algorithm. But a year of pivotry with this algorithm being pretty aligned, and it says by next week, like the price is so parabolic that it would invalidate the algorithm. So that's my thoughts on that in Mara. This is one of the major things. We really needed that descending resistance breakout, but we keep getting a sell-off, which is dragging it further away. I'll show you here. This is what we got on Mara. So we were right here, close, and all we needed was one really good up day, and we would get it. But this weekly candle across the market matters. So what happens today and tomorrow matters. Also, jobs is this morning, and then tomorrow's PC data, which is the Fed's favorite inflation gauge, which could rally the market. But Trump needs to shut up. This is when this finally broke out. This is what sent NEO. Right, so Mara, this did break out, and this is what sent Mara. So far, we got a pretty decent rally. We hit demand or supply. This is supply, right? But look where we found support. We found support with essentially what was resistance for most of the downtrend, which was the red cloud and the red 20-day moving average. It's now flipped green and now should find support. Did we find support here? Yes, we did. So now we're above the downtrend for the most part. We found support. We got a bottom wick 2 days in a row, right? This is after we broke this downtrend since November, which is a very bullish occurrence, right? That's when the daily time frame.